Welcome to our press conference call for the April edition of the Philadelphia Federal Reserve's Manufacturing Business Outlook Survey. I'm Marilyn Wimp, Media Relations Manager at the Federal Reserve Bank of Philadelphia, and I'm joined today by Senior Economic Analyst Mike Trebbing. Mike's going to start us out with a quick overview of this month's survey, and then we'll take some questions. Mike?
Good morning. Our regional manufacturing survey's broad diffusion indexes suggest modest growth this month. Indexes for overall activity, new orders, and employment were all positive, although at low levels. Firms continued to report moderating price pressures, that is, both prices paid and prices received indexes were negative this month. That is, the share of firms reporting price reductions greater than the share reporting price increases. Firms' expectations for the next 6 months remain overall optimistic, but indexes remain at levels of optimism below those of most of last year. I'll point out that our supplemental questions this month, we ask about the business impacts of the stronger dollar since last year. And on balance, firms reported negative effects, with the largest impacts being reported for sales of exported goods.
Okay, thank you, Mike. Kathleen Madigan, Dow Jones, we'll start with you. Do you have a question? And when you're not asking a question, if you could put your phone on mute. Thank you.
I did wonder the charts for the special questions. Can we get the actual percentage percentage results that are in the chart, or is there someplace on the website we can find it?
No, but we can provide that for you.
Okay.
Easily. We can email that separately.
Okay. And when you say about export prices, exactly what does that mean? That they can't raise their prices, or that they're finding more competition from other foreign producers or foreign competitors?
We asked them 3 sets of questions related to that. First of all, we led off the question, just asked about their share of revenues coming from exports, and that's presented in the first chart. And then we asked 2 questions. One for them to just consider their foreign business activity, and for that we asked about the prices that they paid for imports and the prices received for exports, and then also the effect on foreign sales. And then we ask a separate question about the domestic business activity, similar questions. And then since, of course, some of them are benefiting with lower prices of imported goods, primarily raw materials. And then we ask them to appraise the net effect on the business. So the questions, as we asked, are exactly as stated in the table. We let them interpret those as they wished, and of course we gave them the options of saying no effect, slight or significant positive effect, and slight and significant negative effect. So it was let us balance the effect of the export good price versus the domestic, the effects of lower input prices. So and we found on balance that there was some negative effect, with as I mentioned in the statement, the bigger effect being on foreign sales, but it was offset partially by the improved cost of raw materials, or as we asked, just prices paid. Does that answer your question, Kathleen?
Yeah. Thanks.
Sure.
Okay. Beth Fitzgerald, New Jersey Biz, do you have any questions for us?
Yeah, Mike, could you kind of give me an overview of what you feel the big takeaway is from the special question on exports? Mm-hmm. What do you feel is sort of kind of the big picture takeaway on those questions.
Yeah, well, I think it's confirming of what we're hearing nationally on the effect of the stronger dollar. We wanted to quantify it a little bit better with regard to our sample, and on balance, it's had some negative effects. Although I think in our scale of responses, the effect was slight on balance, and we noted that the larger the percent of revenues coming from exports, of course, the larger the effect on those reporters. For example, the firms that had greater than 25% of their revenues from exports, on average, that group had over 40% of their revenues, I think, coming from exports. So they're going to be affected a little bit more than the firms. Obviously, the firms that had no involvement in export markets. So on balance, the effects are negative, but the net effects are more in the slight category than significant for the group as a whole. And of course, keep in mind it's a regional survey based upon about 75 manufacturing firms. We think are representative of our region.
And the reason for the negative effect, just to be real simple-minded about this, is that with a stronger dollar, our exports are more expensive overseas. Right. Is that the idea?
Right.
I know that seems like a very simple question, but I find this kind of stuff confusing. The other thing is the 10%, the overall 10%, exports represent 10% of revenues. How does that compare to historical trends? I mean, how do you view that number? I mean, is that kind of what you expected? I know there's been a big push by the Obama administration to increase exports.
We have asked that question in the past, and we've asked them whether that share has, for individual firms, whether the share of export markets has grown as a share of revenues, and indeed it has in the questions that we've asked over the years. This question in particular is a little bit different than we've had in the past, in as much as we broke it into a little more detail. But we have asked a couple times about the share of revenues from export markets. I can't say whether that 10% is a good representative number for the national numbers, but it's close to what we found in prior questions for this group. We probably have a.
How long have you been asking that question, and is it up from a while ago? I mean, what had it been? Can you give me a comparison?
I can't. I don't have the numbers in front of me, and it's been a couple of years since we asked this, but and I can't say that it's going to be, a good representative number for over time, and in particular since the group of survey respondents has changed over time. So
right.
I can't say with any great degree of confidence that, except I recall the last time we did ask this that they did share the fact that this was a growing market for them.
Okay, growing market for them. Kathleen, Madigan, do you have any follow-up questions?
I'm also curious. It struck me that new orders and shipments are kind of struggling, and yet we had this big pop in the employment index. How should we be reading that?
Yeah, that's. I think the fact that they're hiring a little bit more. We had a pickup in the number of the share of firms reporting increases, from like 17% to 21%. But a drop in the share of reporting decreases on the employment front. So, I think that's foreshadowing of a pickup in production going down the road. They wouldn't be hiring if they weren't optimistic about it. But you're right. The broad indicators since the beginning of the year have really hovered around these single digit numbers. Yet, yet we did see a pickup in both average work week and employment this month. So that's one positive side, suggesting that things aren't declining at least.
Okay. Beth, any additional
No.
questions?
No more questions. No more.
Okay. And Kathleen, any other questions?
No, none for me, thanks.
Okay. Well, thank you both for participating in our press conference call for the April edition of the Manufacturing Business Outlook Survey. Our next survey will be released at 10 a.m. on May 21st.